Tom, will you tell us something that you believe about industrial real estate that might surprise us?
I've gone from 0 square feet of industrial real estate to 600,000 square feet in 36 months. It is possible.
Welcome to the source of commercial real estate, where we talk to the experts in commercial real estate so you can grow your business, find a competitive advantage, and use real estate to live the life that you want. I am your host, Jonathan Hayek. I'm a former public school teacher who found financial freedom through residential real estate investing. And now I invest in commercial properties, particularly small industrial. And today I have the privilege of talking with Tom McCrossin with New Lane Management. Tom started his investing journey in residential real estate investing, like a lot of us, and now he owns and operates, like he just said, over 500,000 square feet of industrial. Tom, thank you so much for joining me. How are you doing today?
I'm doing awesome. Thanks for having me. It's an odd week here in Milwaukee, Wisconsin. It's averaging like 55 degrees. It's November. Looking forward to the next 2 months. We close on two more deals before the end of the year, as long as the financing all comes through. So it's been a wild year, and I look forward to what January and February and March looks like. So,
Tom,
yeah.
I want to hear about this dramatic rise in the industrial world. But before we do that, tell us more about your background and how you got into real estate in the first place.
uh, I think like a lot of people, I fell into it. I didn't like grow up saying, "Hey, I want to be a real estate investor. I want to own industrial real estate." That was never in my vocabulary. It wasn't until 2019 did I ever hear the word industrial or warehouse, and that there was an opportunity to buy, $1 million plus property working a W-2 job, and the the first deal was the kind of the playbook for the rest of it. But I guess going backwards, I've been a property manager in condo associations. I've done inside sales. I've done general manager of a maintenance company. I've done fire water restoration contracting, estimating, project management. My wife and I bought a gutted duplex in 2012 that had no walls. Thought that was like the scariest thing in my life. At 25 years old, you could say, what's the worst thing that can happen? And I think a lot of what I do today is what's the worst thing that can happen. The piece to the puzzle that you can never take away is what you've learned on what you've done. I guess another surprising fact: I've never read a real estate book. I've never worked for a real estate company. There's a lot of I nevers, but if you're fearful and you can overcome those fears, you can do a lot. So that's where I am today.
So, when we're talking about your portfolio of industrial real estate, industrial is a broad term. Can you tell us what that means to you? Is it small bay? Is it single tenant? Is it manufacturing space, distribution warehouse? What is it?
All of it. We have buildings that range with space that are 1,000 square foot units up to single tenant buildings that are 82,000 square feet. I have 2022, flipped a 105,000 square foot building in 7 months from buying it, leasing it, renovating it, and dispositioning it. Do I think that's a repeatable action? Time will tell. Currently, we haven't found any opportunities that are that juicy. Um, but I guess my share is that anything with four walls and a ceiling can have value. There are plenty of buildings in your neighborhood, down the street, in the inner city, in very well established neighborhoods, industrial parks that can be added with value. So it always excites me to talk about buildings. It excites me to go look at them. There's nothing more jaw dropping than to walk into a warehouse that has like 35, 40-foot ceilings.
Take us back to the initial transition from residential to industrial. There's a lot of people listening that are attracted to industrial but aren't sure how to get into it, how to get that first deal. Will you tell us what spurred you and your transition from residential to industrial?
Friend of mine, I was working in fire water restoration. Friend of mine was electrician. I shouldn't say was, is electrician, currently still is today. Great mentor. And his business needed a warehouse to operate out of. He was in a 2-car garage, needed a little more space to expand. And he invited me and said, "Hey, I know you're interested in real estate. You want to partner on a warehouse?" And I said, "What's that?" Uh, and I brought the idea home to my wife and said, "Hey, Dan would really would like to partner with us." And she immediately said, "Why us?" I said, I don't really know. I don't really know much about the building, but I trust Dan, and I think this could be a really good start to building our portfolio. My wife and I got married in 2010, said, hey, we'll buy 20 duplexes in a very tight neighborhood, west side of Milwaukee, and we'll pay them off and we will live on that rental income when we retire. We don't need anything else. Uh, I think a lot of it's changed in the last 5 years. When I got walked out my last W-2 job, I needed to figure out how to make money. Um, so on that first industrial deal, we had a commercial broker bring us a pro forma, kind of give us a spreadsheet of what the rent was. We were looking at a vacant building, but my partner Dan had 4 his business and 3 others that would rent from us, and so we took a single tenant building and subdivided it into multiple tenant spaces. And that entire process intrigued me, thinking about what 4 walls and a ceiling could be, how we could transform it. I'm very much a hands-on investor in 2019. Today, a little less. There's just not enough time to go swing a hammer when you're buying a building every other month. Um, but that concept of the first deal in 2019 was just like the story worked. The single building, you can multi-tenant it. You can de-risk your debt with having multiple tenants. The idea that all 4 tenants would go belly up at the same time is a lot lower risk than if it was one tenant. Um, and I kind of took that methodology, that business plan, and went to another investor that I knew and who I had bumped into in 2020 and said, "Hey, I'd love to buy some more real estate." And he positioned it and said, "You find the deals, I'll find you the money." And I guess you could say the rest has been history because it's worked exactly that way.
Did you say your very first deal was a single tenant property that you divided into 4 different spaces?
That is correct.
That seems like a heavy lift. Will you walk us through that a little more?
I think I was relying heavily on my partner, who was comfortable to say, "Hey, we have a tenant that's taking half the space." It was a 19,000 square foot building. I should correct that. It was 19,000 square feet into 2 buildings on one property. So it was a 2-acre site. One building had some warehouse and office. The other building was all office. And the 4 tenants, the spaces kind of automatically kind of divided themselves. So like the building that had warehouse and office, you could divide it at the office wall and say, all right, we have, my electrical partner, his office was in that section of the building. Across we'll call it the parking lot was the other building, and that building you could easily see how the office walls could be divided to have 2 or 3 different office areas for different tenants. And so when we positioned it to some of the relationships that my partner Dan had, we had a very large key tenant that needed to be out of their existing space and into a new building. And we could get them double the square footage for the same rent they were paying in the current space. And so that dynamic really worked well. Um, I think I was talking to a broker the other day. He said, as you accumulate experience, you tend to talk yourself out of deals. And the question was, if I knew what I knew today back in 2019 when I bought that deal, and the answer was no. The
Why?
answer the answer was no because it was a heavy lift. But we didn't know what we didn't know. And I actually sold that building last November for a 4x equity in 4 years. We invested $140,000 and we walked away with 4x our money in 2023.
So, would you say that doing a heavy lift like that as your first deal would maybe not necessarily be a recommendation to others, or would it be?
I think that my recommendation is to get started at some point. If you can't get started, you'll never start. And to talk about what you want to do or how you want to do it, my quick answer is just go start. Go pull the trigger. Go buy that first duplex. Go buy that fourplex. Go take an FHA loan and buy a four family that you can renovate each unit as you live there and kind of make your way around the block. If you never get started, you can't get further ahead if you don't start. The amount of people that I talk to that go, "How do I get started?" Just go find a building and buy it. Go find a duplex and buy it. What are we fearful of? We're fearful of the unknown. But the only way you know is to go do and act. And I think that is the message that I have learned over the last 5 years is continue to learn as we grow. We don't have to know everything. There's plenty of people out there that do. That's why we're talking on this podcast today, Jonathan, sharing the information that others want to gain. But I think the biggest thing is having the right encouragement, the right circle of friends to share in the challenges and tribulations and success that we can all accomplish through commercial real estate. Done very well. I think a lot of my background in the operations side of looking at different aspects of how a commercial building works helps, but there's nothing that can't be learned along the way. And going and joining some masterminds that cost $50,000 or $100,000 a year, or whatever that cost is, take that money and go buy your first deal. You'll learn a lot.
I want to continue to poke and prod at and try to figure out how you scaled so big so fast. So, can you tell us what is the ownership structure of the majority of your portfolio? Are you the sole owner? Are these syndications? Are they
I
partnerships?
definitively, unfortunately, am not the sole owner, but there is a quite a mix of ownership stack. Some deals I'm 10% that I accumulated by an acquisition fee rolled into the equity side of the deal. So so if you need $500,000 and the acquisition fee is 100 in the purchase price, I would then become 1/5 of that deal. I would go find four other, partners that need the 500,000. I'd roll myself into part of the equity through, being paid an acquisition fee that we're rolling into the equity side of the deal. Some deals I've had cash through a refi of some residential assets that I bought and improved upon, and I own 50%. Some deals we've quickly been able to. I've gotten some deals structured where it's a 30% of equity that I own. The investor has 70, but most of his cash is a loan as a way to structure a deal. I have deals that I think at this point we are definitively going down the syndication method. We're setting up a $20 million fund in 2025. I am a huge proponent of putting multiple buildings into one fund structure. So I do not like one building, one bank account, one tenant type deals because it to me just puts a lot of stress and challenge if that tenant stops paying rent or decides to move out of the building. What do we do? As we grow, we can continue to weather some of those storms. I have enough other liquidity to weather that storm. But when you're getting started, to buy a warehouse that's 20,000 square feet with one tenant, and you've basically creatively set up a deal structure so an investor puts up the money and you put in maybe $5,000 of equity. Once that investor's loan gets paid back, you jump to a 30% equity split. If that tenant goes defunct and you guys have to now come up with $50,000, that puts you in a really bad spot. So I have 10%, I have 5% equity in some holding companies, I have 30% in others, I have 50%. I'm a big advocate of sharing the risk with others. I would rather have a huge portfolio of 100 buildings that I own 10% each than to say I could own 10 buildings 100% myself. Um, and that's massive. That's mostly due to the fact that I want to create a portfolio where tenants want to come and rent from us. My message to our market is that we are the landlord that gets along with our tenants. We want a partnership. So I'm looking at from a relationship, sales, partnership standpoint with the tenant, not just looking at how the investor makes money on the real estate.
Approximately how many properties are you a part of?
We have 18 industrial buildings.
Okay. So, and again, it sounds like a really wide range. You've got some small bay stuff, some larger distribution stuff, some single tenant, multi tenant flex space. So, what are you experiencing? If we can speak in large generalities, just kind of a market update. What are you experiencing in terms of tenant demand,
It-
size,
yeah,
amenities, that sort of stuff?
I think that as I look and grow our portfolio, I've bought buildings that had 10-foot clear height. I have buildings that have 20-foot clear height. I have buildings that are hard to find off the freeway. I have buildings that are right along the interstate. So I think two pieces of the puzzle that I've learned and we're sticking very strongly to is number one, the location is most important. If it is a location of a piece of real estate that is hard to find or is 30 minutes off the interstate or is in the middle of nowhere, we will not entertain it. We will not try to go buy it. So that's number one is location. Number two is functionality of the building. How tall is the building? How many docks does the building have? How many drive-in doors does the building have? And how much percentage of the building is office? So why do I state those specifications? Because that's what tenants are concerned with. They want employees that can easily find the building. They want location that is easily reachable to certain parts of the city, and they want to have, if they need 20,000 square feet, they need two docks. That's just kind of a standard expectation for some of the users that we have. If we go to our smaller base stuff and we get into like 5,000, 3,000 square feet, not every unit that size needs a dock. I do have a building that has a dock and drive-in on 4,000 square foot units. It is a primo location, primo functionality, and our clear height is 16 plus. I have another building that's 10, like I had mentioned, that's 10-foot clear height. It takes 6 to 9 months to lease 2,500 square feet because tenants walk in and see that it's got an 8-foot garage door, and that it's 10 foot, and they go, oh, this is too small. Yet that same tenant goes down the street, rents a 16-foot clear height building, and never racks above 8 feet. And I bring that up because the impression you get when you walk into a building that has 14, 16, 18-foot clear, it makes it look massive. The business owner gets excited for their growth potential. When they walk into a space that has 10-foot clear height, you can jump and hit the girder, and they have a trailer that's 7 foot tall. They're just concerned of doing damage to their equipment, to the building. There's other costs that come into it. It just takes a certain type of user to fit in a 10-foot clear height building. Your plumber, perfect user, doesn't want to climb up a ladder to get racking, has plenty of length to lay pipe. Their tools, a 2,500 square foot space is intended for a contractor type bay. If we talk 10,000 square feet or larger, you're talking either an assembly manufacturing type tenant or a, large service provider, smaller distribution center. Your electrical supply house would be a 10,000 square foot user. Your elevator service vendors could be in 5,000 to 15,000. Depends how big their business is and how much service area they're servicing. Um, so when we look at product, what are we seeing in the market? Small bay is still very highly desirable in Milwaukee, Southeast Wisconsin. We are not seeing that slow down in the last 3 years. I started this business in 2019. So in 2020, nobody really wanted to do anything with me. That was the first year of raising, partnering with other investors. Everyone was like fearful of what the pandemic was going to do. And in 2021, we blew up. I bought a $6 million building. 9 months later, we sold it for a $2.5 million gain. And that is how I was able to quickly grow our portfolio. In 2024, we're doing more syndication type fund model, and that's allowing us to raise more capital and continue to buy more real estate.
What is the ideal percentage of office space in one of these buildings?
If we're going 5,000 square foot bay, I would say less than 10%. If we're in like a 20,000 square foot building, it could range from 5 to 15%. Um, we 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 try really hard to stay away from two-story office functionality on a 20. There's a lot of 20,000 square foot buildings where, like in the 1970s and 1980s, they put a two-story office on the front of the warehouse. Try to stay away from that. Tenants don't like the stairs. Nobody wants to really count the second floor as off, square footage that's rentable. So you can buy a building that's 25,000 square feet, two-story office, 2,500 square feet apiece, and you go to sell that building or rent that building, and it's not 20,000 square feet, it's 18 or 17,500, and you lost 2,500 square feet of office that a tenant doesn't want to pay for because they argue we'll never use it. And you're kind of like, well, it's part of the building.
um, Tell me about your best suggestions for attracting tenants and retaining great tenants.
Attracting. So I built my business model on talking to anybody and everybody I could. So I would tell them who I am, what I do, how we do it. And then that led me into building that same chain. So that was with people just in general. That's how I ended up finding a lot of investor money, because your Rolodex in your phone will always lead you to someone that has cash sitting on the sidelines that you didn't know actually had cash because they don't talk about it. So that's the who I am, what I do, how we do it. Then that led into talking to any other commercial brokers that I could find and introducing them to who I am, what I do, how we do it, and why you should find me buildings. And so through those two channels, I have continued to build the reputation and relationships that we are a very tenant focused operation, meaning that we want to do what's best for the tenant first, because that will lead to less tenant turnover. The philosophy really comes from, if we have a tenant in our portfolio and they need more space or they need less space, we are going to work with them how to move them from one building to another. And so if the hardest thing in commercial real estate and the biggest fear out there is finding tenants, then don't lose them once you have them.
Mm-hmm. Do you buy vacant properties?
In 2022, we were looking heavily for vacant buildings. In 2024, I'm looking for very short-term leases in place. When you're doing underwriting and you're projecting what you're going to make on a building and you have to start with a zero rent growth in place, it's very hard to average out with a zero. Even if you can get, another way to look at that is, if you have a vacant building, is to get the seller to lease back for a year while you work on leasing the building. Pay that. So, for example, they want $1 million for the building, and let's say the cost of rent, mortgage, operating expenses, and hitting your debt coverage service ratio cost you $100,000. These are really bad numbers, by the way, just using round numbers. If it's $100,000 a year, pay the seller $1,100,000 and have them pay you rent on the $100,000, because you overpaid for the building basically, but have them pay you rent as you find a new tenant. You now don't have a vacant building. The economics look way better, and the seller could go, why would I do that? Because you want to get out of your position, and I want to creatively find a way that we can weather the storm together. And through that process, you now no longer have a zero in your average. you have maybe that's 8% cap rate going in or 10% cap rate going in. But also underwrite that deal so that when you find a new tenant, they are paying you more than what the seller's paying you. Meaning, don't overpay for the building on an 8% cap rate if the rent that you can collect makes it a 6 cap.
Talk more about your buy box. You said that you're looking for properties with expiring leases. So why that? And what's your business plan with them?
So our business plan is to buy buildings that are not smaller than 20,000 square feet, not sitting on less than 2 acres of land, and ideal purchase price ranges from 2 million to 5 million for purchase price. Uh, the reason I choose those three characteristics to start is that it takes me out of competing with one-off investors. And secondly, uh, so like the $2 to $5 million, when you need 25% down, that averages between a $500,000 and $1,200,000 of cash for closing. Most one-off investors don't have that kind of liquidity, but due to the fact of the partnership and the way I raise capital, we have the means to get the cash. Secondly, we don't want to be competing with institutional investors because they're going to buy at a higher dollar a square foot, and we want to stay in that B class, C class type asset. So again, we have less competition going after the same assets. The last characteristic we look at is needing to increase value of the asset by 30% within the first 5 years. So why is that important? That's important because if we're buying a building with 25% down plus acquisition fee and some other random costs that we raise capital for, it's roughly 30% of the purchase price. If we have the means of raising value by 30% in 5 years when we refinance and it's gone up 30%, we can actually pull out 30% of our value created in cash back refi, tax-free cash to everybody involved. And we still own an asset for the future on cash flows. So if we're able to double cash on the conservative approach going in, it makes the ability to hit a 20 and 30% IRR calc much more consistently.
Talk more about how you are adding that 30% value. Is this simply buying deals with below market rents? Are you filling vacancy? Are you doing other creative things?
So there's additional two things that we look for. And number one is we want to improve the real estate. So we need some kind of CapEx project that we're going to handle. Roof, parking lot, HVAC, painting the building. We need something to kind of showcase that we've improved the real estate. And then number two, we look for the short-term leases, less than 5 years, because we want to be able to negotiate different terms on those leases. On a commercial real estate lease, a triple net lease specifically, we're able to add different terms to the lease that create different types of value. How do we de-risk our exposure of costs? By putting a lot of those costs on the tenant. How do we help the tenant? If we do that, is by helping them with the operational costs of the repairs. We want to be their go-to contact when a toilet's not working, or there's a roof leak, or they need to patch the asphalt in the parking lot. We want to be able to be that value partner to be relied upon, and also provide value back to the tenant to ensure that we're looking for the best cost possible. And the best way we can do that is by building that relationship of trust. We don't ever want the tenant to look at us like, oh, the landlord's only he doesn't care what it costs because it's our penny that we have to pay. But if our business is real estate and their business is manufacturing, how often do they know who to call for asphalt?
How long do you plan for to fill vacancies?
Right now, we plan for 6 months. If it's a multi-tenant building, I'm more looking at what the economics of the building are, because we bought a building in July. It had a $400,000 NOI. We lost one tenant, but we gained an additional rental rate on another tenant, and we're still at $400,000 NOI with one vacancy. So theoretically, I don't have any pressure to go fill that vacancy, but time is money. So there's pressure to continue to increase our NOI. But I also have learned with smaller bay users, we don't just want to release it to anybody that walks off the street. We want to ensure that tenant has a business. What does that mean? We want to know that they actually have some type of revenue coming in. And it wasn't like, oh yeah, I did this on the side. I was in my garage and now I want 2,000 square feet. And I do, they're a DJ business, but they only do 2 DJ events a month and they make $50,000 a year, but the rent costs them 25,000. I like in 3 months after they move in, they could just decide to stop paying me rent, and now I have to go and file an eviction. And I would rather sit vacant to find the right user of the space than to quickly get it filled with whatever cash is dangling in front of my face.
Where do you see opportunity today? What are you excited about?
I'm excited about our ability to take office space and convert it to flex. I think there is a tremendous amount of opportunity. You have to find the right building to have the right clear height, but there is a tremendous amount of office that's coming online that I think you can steal for $20 and $30 a square foot. Put $20 to $30 a square foot of improvements into that building into flexible space, meaning there's a little bit of office, a little bit of warehouse, 2,500 to 5,000 square foot units, and you're able to get them rented from an office environment that nobody wants to rent.
Have you done any projects like that?
I have one we closed on in October that we're transforming 40,000 square feet into 6 units, ranging from 3,000 square feet to 16,000 square feet. And that building specifically is in a part of town that doesn't have a lot of smaller bays. And this building specifically has 20-foot clear height, which is amazing. So when we're done with it, it should be a product that no other landlord in our geographic neighborhood has the same product, and we could immediately devalue our building by just getting it rented with lower rent rates, and then over time force those rental rates up. The other phenomenal part of that deal is that I only need 2 of the 6 units we're creating rented to get to a stabilized value. And that allows me to really increase our NOI and wait for the right user to pay me what we demand for the space we've created.
What do typical debt terms look like for these properties? I assuming you're getting financing. What does
Yeah.
financing look like today?
Financing today is 75% loan to cost. This deal that we're doing 40,000 square feet of renovation, the total building size is 82,000 square feet. So there are 2 tenants operating the other half of it. The bank financed us our construction loan. They gave us 18 months interest only and a 3-year note. So I anticipate by the end of our 3-year note, we'd be able to have a stabilized asset, refinance it for somewhere around the neighborhood of like a $3 million gain in value from our all-in cost. So it was a $3 million building, $1.5 million renovation. It puts us at $4.5 million rough numbers, and we should see somewhere around a $6.5 to $7 million stable value.
And what types of lenders do you have success with? Are these local banks to the property?
Most of our lenders are community lenders. I just recently signed up on with a tremendous amount of value created by a local mortgage broker that financed this deal. It took 9 months to close on this deal. There's some environmental risk. There is construction. There is lease up. It's about just about anything you could add to a real estate project. I had the first lender say yes, then that bank was getting acquired, and at the 8th hour, they pulled the debt from me. The seller freaked out. The brokers were upset. I called up this mortgage broker that I had heard really great things about, and he got the deal done in 35 days. From the time I contacted him to the time we closed was roughly about 35-day timeline. And because of that experience, I don't think I'll ever go directly to a bank by myself again. I think mentally wise, in the last 5 years, I said I never want to pay for a mortgage broker. I feel very strongly that I can create my own value by just calling bankers direct. I can tell you this mortgage broker has the ability to get in front of the right decision maker at the right lender and hold the banks accountable because he is the guy that continues to bring debt deals to those bankers. And so there is a relationship that he has that us as investors should want to pay for. So if I have learned anything in 5 years, I should have dealt with a debt broker 5 years ago.
Good ones are hard to find, though. It sounds like you did find a good
I
one.
found a phenomenal individual. I if he continues to execute how this deal went, uh, I should have saved $500,000 over the last 5 years in debt.
Do you want to give him a shout out? Who is it?
His name is Ricky Schneider with Crux Commercial Group. Rickey. And the company's CRUX.
All right, I wrote it down. I might be calling Ricky.
And they work nationwide. So it's not a Wisconsin contact.
What is your prognosis for this asset class? We've had a huge run up over the last few years. Clearly, you have benefited from it. What's
Yes.
your outlook moving forward?
I think we want. So I was talking to a broker this year, and this flex industrial small bay. His comment to me was, "Is it a fad? Is it a fad that these businesses that are operating 2,500 square feet will forever be in 2,500 square feet? Are there enough new businesses that are going to fill it?" I don't know the answer to those questions. I believe that there are businesses that need that type of small space. There's only so much growth you can do in two-car garages. There's only so much growth you can do in storage units. The ability to have climate controlled garage door, 15, 16-foot clear height space, I think inevitably will always be there. Nobody's building 2,500 square foot units. I think there's some self storage guys that are trying the contractor bay business model. Um, I think if you're really wanting to run a business, understanding what your cost of space is, you can get a better deal through a operator like myself than going to the contractor bay gross lease concept through self storage facilities. But everybody has a risk tolerance of where your cost surprises come from. On a triple net lease, you have some OPEX that goes up and down each year. On a gross lease, you're fixed, but you're paying for it. Somebody's got to offset the risk of OPEX. OPEX meaning operational costs of the property. I think the shorter answer to that question is a lot longer conversation. I think that's where we mix in the smaller bays in our portfolio, as well as trying to find buildings that are 20,000, 40,000, 80,000 square feet. Because inevitably, I'd love to have those 2,500 square foot users grow to 3 units. And all of a sudden, they're like, Tom, I need 20,000 square feet, right? So it's providing product that fits any type of business. Anytime I've had vacancy, I wish I had more of it at certain times. We've averaged less than like 1.5% up until this year when we just bought. So we bought 40,000 square feet of vacancy. I'm working on another deal that would have 50,000 square feet of vacancy. All of a sudden, you take 600,000 square feet of real estate and you got 10+% vacancy, but you're creating products that are all in cost is less than 50% of new construction. So it's hard to continue to see those opportunities and say, how can we not buy it?
Does vacancy keep you up at night?
I think in the beginning it did. Um, I can tell you because I continue to buy more buildings and look at other deals and be involved in tenant lease negotiations and our capex projects. The smaller bays that are on the vacancy side, I have to remind myself weekly, like, let's go figure out why the broker hasn't leased it. So I think it's about having the right team in place to go find a user for you. A great commercial real estate broker is out there knocking on doors day to day. And that's the value of why they get paid the commission that they charge.
Tom, this has been a great conversation. You have a very diverse portfolio, and I really admire it. You've got a great website with some great information about your properties. If listeners want to connect with you, learn more about what you're doing, where would you like to send people?
I would send them to Instagram. I am of that generation, so Tom McCrossin on Instagram would be where you could connect with me on a personal level. On a professional level, you can find me on LinkedIn as well.
Tom, thank you so much for joining me today.
Yeah, thank you for having me, Jonathan. It's been great.
Listeners, if you enjoyed this conversation, reach out to either one of us. We love talking about commercial real estate and we would love to connect with you. Thank you so much for listening. We appreciate you. Until next time.